Hey Armando, this is Ryan with TrendLizard.com. This is the second ETF ticker that you had sent me, SPY, of course the Spiders S&P 500 ETF. Of course we do follow this on a day-to-day basis, but I can understand why you'd want a little closer look at it so that you can understand where we think it's headed over time. I have provided analysis on SPY since 2003, which blows me away. It's been a long time, but that was back here towards the low that took place back in late 2002 and 2003. And we've had a ton of success trading this guy. We've been able to trade pretty much every big trend, including the one that's going on now. But every move has been big when you look at it in this time frame. Our data goes back to 1993. A very nice advance, one of the strongest moves we had seen in history at that point, followed by a massive counter trend three-wave pullback that played out from 2000 to 2009. So this whole thing is just one big counter trend move. We talk about counter trend moves all the time. This one just happened to play out over the course of about 10 years. So that was a real massive move, but it's actually bullish for the long-term time frame for SPY. After it finished this counter trend move that you can see actually went net sideways. Certainly didn't feel like it when these big down legs were playing out, but it did go net sideways. But once it completed in 2009, a really nice advance began. We were able to get involved back in early 2009, and we've really had a lot of luck sticking with this move and trading it from there, and I don't think it's over. So this move off the 2009 low is one big trendy move that's not yet over. A trendy move is a five-wave move. So far we've had four waves of the five-wave move. This first wave is in the direction of the trend. Second wave moves against the trend. The third wave goes in with the trend, and the fourth wave, the move that we've been in over the past 14 months leading into February, was a big counter trend move. So we're due for a fifth wave up leg here. So that's bullish stuff. We're looking for this up move to continue off the 2009 low, and so there's that. If we zoom in and look closer at the advance off the 2009 low, we can get a little bit more detail on what's going on here. You can see there's some really big up legs. It's been a really direct move overall, and this kind of sets the stage for what we're expecting with the fifth wave as well. So that's the wave that we believe began in early 2016 and has a lot of upside still to go. So here's some stats about these up legs to this point. So the move off the 2009 low into the 2011 high, which we call wave one of a five-wave move, it lasted 2 years. It gained 66 SPY points, and it was a 114% return that this ETF enjoyed. After the pullback in wave two off this low in 2011 up to the 2015 high, this wave, wave three, lasted 3.5 years. It spanned 102 SPY points, and it provided a 104% return. So these are really big up legs. Wave 5 is expected to be big itself. They tend to be similar in size. So if you look at the other two up legs, they doubled the value of the ETF every time. I don't know if that means SPY is going to 360 or not. It just tells me that the potential is there for a significant up move off of the 2016 low, and that's why we're bullish. So let's zoom in and look at the advance off the 2016 low. Well, first this shows the big choppy counter trend pullback we've been in since late 2014. We believe that this big sideways move ended in February, and that this is the resumption of the uptrend, the big up leg I told you that we're looking for. So we've been going more or less straight up since February. SPY has moved from 180 to 210, so a pretty sizable advance from there. But it does look like it might have recorded a near-term high just last week or the week before that. It's began to pull back a little bit off of April's high. We think it's probably going to continue lower in the near term. Looks like it could be headed to the 192 to about 200 range, which would be enough to correct this up leg here and kind of refuel and give it the gas it needs to give us the next up leg of the long-term advance. So that's what we're looking at. We're very bullish on SPY. It looks like in the near term a pullback is taking hold that is probably going to push it down to the 192 to 200 area. As long as it stays above, say, 191, this is going to be a great buying opportunity. You should be bullish on SPY. I would recommend Buying it after the pullback takes place, once you see some strength emerge from there, it should be a good buying opportunity to participate in another up leg that might look something similar to what we saw off of February's low into April's high. So lots of strength is expected ahead, so I would recommend being bullish as long as SPY is trading above 191. Thanks, Armando. I got one more ticker coming your way in a moment.